Awesome. Sounds good. Hello, world. I'm G, Realtor Gee here with RD Real Estate, and here with our special guest here, Saul. Saul on finances. Thank you for coming out and sharing this space with me, sharing this time with me. The reason why we're doing is really just to provide value to the audience, right? Provide them information as well as give you a platform to kind of share all the great work that you're doing in the community. I know that you're a professional in the expertise in financing, which I think is huge. And I think financial literacy really is kind of not talked about a lot.
Absolutely.
And so we just want to use today just kind of talk more about that. Talk about your journey, what led you here, what you're interested in now, and kind of go from there. So, yeah, you want to tell everybody like who you are, where you're from,
Sure,
like
sure.
that.
So no, thank you again for having me. Pleasure to be here. As you guys are going to realize, the world of finance is my passion. So I feel like it's my life purpose. So happy to be here. Happy to share this type of information. And to your point, financial literacy is definitely something that's not talked about enough, especially in lower income people of color communities. So that's one of the main reasons why I even went independent. But to get into my story, so my full name, Ronald Saul. I've been in financial services for going on 17 years now.
Oh,
And I've worn many hats in my time in the industry. And my journey started out, I'm a huge person when it comes to psychology, how the mind works. That's always been something that's fascinated me. It's funny, my story growing up, I wanted to pursue that going into college. And if for those that may remember, this is early 2000s. For those that may remember that big occupational handbook.
wow.
My father took me to Barnes and Noble, had me go check into psychology, and I remember it kind of clear as day, seeing the page and just looking at the demographic information, having to get a doctorate degree just to make a slightly below average income for someone. So it kind of sent me back to the drawing board. But going into looking at other fields, what drew me to finance was actually the behavioral and psychology of finance.
Really?
So I was kind of able to find my niche and my interests,
Yeah.
even on the business side. So I went to Howard University. I got a degree in finance, and coming right out of college, I went right into financial services. I was working with various insurance companies, and I started that in 2008. So we all know what was going on during that time.
Yeah, man. Yeah.
The market and the economy taking a swirly in the toilet. But honestly, that experience, I wouldn't trade it for the world. It was very difficult. You can imagine, not having a network, coming right out of college, no experience, trying to sell insurance during one of the worst financial times in history. So you can imagine what life was like during that time. But what I found was, even though it was tough to make a living and get things going, the information that I had access to, I could literally see making an impact in people's life from meeting to meeting and helping them through that time.
Wow.
So even though it wasn't tied to what I was, being compensated for, the information I had access to was literally making a difference from the moment I started talking to people.
Wow.
So I knew I was in the right space. That's what really solidified my passion for what I do. It was just a matter of, all right, how do I navigate and get in the right space to actually make a career out of this, and,
Right.
and so on and so forth. So I did that for about 3 years, working in insurance sales. I then transitioned to Vanguard in 2011, where I spent most of my tenure in the industry. I worked with their high net worth services, so I was servicing clients with $1 million plus in assets, about 600 households like that. And then my second half was working in their asset management services when those launched in 2015. So I was actually part of the pilot program of integrating those services into the other service levels of Vanguard. So not only was I in the asset management spectrum, but I was also part of the integration of it. So I kind of got the behind the scenes
Wow.
and stuff like that
Yeah,
too.
yeah.
So, and today, I stopped at Vanguard due to COVID to take care of my son. And when I decided to get back in the workforce, I realized I always knew I probably wanted to go independent again. It was just a matter of time. So COVID and the pandemic spearheaded what I kind of already wanted to do.
Yeah.
It's funny how the universe works.
Isn't it? Isn't it?
And I went independent largely because I knew I wanted to direct my experience and resources to those that have little access to financial advice and this type of information. There's a lot of barriers to entry for people having this access to this information for a variety of reasons. Bad conditioning, just the challenges, the costs associated with it, knowing what's out there and not knowing what you don't know, comfort of doing things on your own. There's a whole lot of reasons, whole host of reasons why people, don't get the help that they need.
Right.
But, focusing your attention on that, not enough people in my space focus their attention on the people that don't have the access. They may not always be the most lucrative clients. Everyone wants to get the high net worth folks. Yeah. So that's another issue. But I knew I wanted to focus my attention there, and so far it's been very fulfilling and rewarding.
That's awesome, man. Wow. So I also went to HBCU too. I went to Morgan State.
Okay.
So that's great to hear. That's an incredible journey, incredible story, how you were able to kind of navigate certain challenges and kind of find your way. And I also have a passion for giving back as well, too. Outside of just being a real estate professional, I work in nonprofit. So I work with a nonprofit in Philly, Philadelphia City Rowing, where we teach kids how to row in a river. Completely free.
So you're going up and down the Schuylkill.
That's right.
Okay.
That's right. So if you've driven on 76 at nighttime, you've seen the boathouses that light up.
Yep.
That's where we work at. That's where we operate from.
That's awesome.
But yeah, I definitely can resonate with that. Just giving back to those that don't really have access to that information or just have access in general, and being able to provide that, which is great. And I got into real estate, thinking about the lifestyle and also the opportunity to change lives too. And I've only been in the industry for like 18 months, so I'm still learning. But working with investors, working with landlords, working with buyers and sellers, I realized like having money is not as important as knowing what to do with it, how to manage that, how to keep that, how to save that. And I think we have a lot of examples of people that have come into a lot of money, whether it's professional athletes, whether it's people, hitting the lottery, settlement checks, things like that. Sure. And then it's going within a short period of time.
Sure.
Can you just talk about the importance of like managing wealth and also like, let's say some person watching this came into a lot of money, but they don't know what to do with it. They want to make sure they make the right decision. I guess you are a professional, so you can give advice. Most people can't. But would you have like a general guideline for somebody that came into a lot of money, doesn't have a lot of access to information? What should they do with that?
Sure. So I would say first and foremost, don't be afraid to seek help. I think that's a huge thing that, especially when you have such a life event and you're not sure what to do, and unfortunately, there are a lot of people that are, either scammers or they're going to take advantage of that. So, I mean, we see this with our athletes and folks doing well in entertainment all the time. And it kind of even sets that same conditioning as why they try to do it on their own or, go down avenues that may not necessarily be conducive. It is largely because people don't know how to find the right information, how to find who's, got their best interests at heart. So there's a lot of vetting across the board. But in lieu of all of those challenges, not knowing what to do and not seeking the help as a result is just as bad as, just as big of a risk, if you will, as going out and trying to find, and that's one of the big challenges I come across. And the example you gave, kind of to your point, to kind of piggyback, you said that a lot of people start coming into money, making great income, realizing success. And and I'm sure we're going to get into this, when we think about financial literacy and the different things that you have to think about to make sure you're making sound decisions, it's very vast. Mm-hmm. And oftentimes, and this is especially for those that try to, kind of take courses or learn on their own or read books, you're only going to come into the information based off of what you know to seek out. One of the what I really kind of, and I didn't really speak with in a space that I work now, I didn't really get into, how I work with clients and stuff like that, where my true expertise lies being in financial services, because there's a lot of people that call themselves a financial advisor, and they work in different capacities. But if I had to sum up my expertise in my years of working in the industry, it's that I've learned and become an expert on how the different areas that affect your money are correlated.
Mm.
So how you manage your cash flows is going to impact how things go with debt, how things go with credit, what things you need to protect. That's going to get into all your different types of insurance, how you should be investing. What's your tax situation look like? How are you, what type of goals are you setting? And are you setting the right ones? So this person that comes into this money, what's the game plan for that money? How do you intend to use it? That's going to dictate what you do with it, what things you need to protect, what time frame are you reaching these goals, how are you investing, what's your taxation, how did you come into that money? Is a big chunk of it about to go out the door because you're about to be taxed on it? Or, are there things you can do about that? And another huge area that people often overlook is, hey, they may have figured out how to build their wealth, how to start protecting their wealth. How do you transfer it? You can't take it with you when you pass away. So if you don't have a game plan in all of those areas, you're going to probably lose money. And we see it all the time.
So just to backtrack, if you're watching this and you just hit the lottery, first off, congratulations.
Yes, congratulations.
But you wouldn't suggest to go on YouTube for an hour, watch finance videos, and then make a move. You're suggesting seek out a professional to get advice. Because even what you just said there to me was like really opened my mind up to look at finances more holistically as like different parts versus like one major thing, right? What to do with it, taxation. A lot of people don't really know too much about taxes. That's a huge component when you're coming into wealth, and how to protect that, how to navigate that lifestyle. That's something to really think about.
Take for example, your viewpoint and perspective on this, being in real estate. How many people determine that, hey, I want to buy a house or I want to get an investment property, and where did that goal even come from? It's largely because they may have seen other people do it, or they've heard a lot of great news about it, and now they've made the decision that this is a goal of mine, I want to buy this property. As a real estate professional, you already know a lot of the ins and outs that goes into achieving that goal. And for the average person trying to achieve it, they're going to be very zeroed in on specifically what do I need to do to achieve it, without thinking about how is this path that I'm choosing to go down going to affect everything else that may affect my money. Right. And if you're going to put this money into real estate, what does that ultimately even mean? Because real estate is an asset class. What does it mean for me to be investing in real estate? What does that mean for my finances? How easy is it for me to access that money if I need to? What channels and things do I have to go through? If I do, access that money, either going into debt or, getting a line of credit, which is the primary way of, coming back into that capital. What does that mean for my current financial situation, and how might that impact it? What risks am I taking by doing it? All of these things are questions that you'll have to ask yourself. And I come across situations all the time where, hey, that may be a goal, but I haven't taken care of my financial standing to make sure that even if I do reach that goal, that it's sustainable. Yeah. So, you just take the example of credit, the topic of credit alone.
Yeah.
I'm sure as a real estate person, you come across it all the time, the good, bad, and ugly when it comes to that topic alone, but it's so many more.
Yeah, it's definitely a spectrum for sure. That's a lot. That's a lot to think about, digest. Now, for the layman out there, the person is just like not too, well versed in finances, and a lot of the stuff you may have said kind of went over their head. Could you break down essentially what services you provide? Like, if I was to introduce you to my aunt that's like 65 years old, right? Still sends her rent or mortgages through checks, right? How would you describe what you do to her? What would you say?
Sure. So in the space that I work now, and I'll kind of break it down to kind of preface the answer. Like I said before, there's a lot of people that will use the term financial advisor. It's become kind of a buzzword. I'm actually to the point where I don't even like necessarily using it because it doesn't really explain. Anyone that says that they're a financial advisor, you really have to probe what are they actually doing and work with their clients to really get a sense of what lane they're in. I would consider myself more of a financial planner. That can oftentimes be an interchangeable term, generally speaking. But the reason why I like using it is because my focus is truly on the planning. So for example, you have insurance agents out there. They will call themselves financial advisors, and to some degree they are. But how much of the planning are they doing to provide the services that they do? They're soliciting financial products. They're soliciting annuities or insurance products, maybe some retirement accounts. But are they covering the full gamut of what things you may have to think about from a financial decision-making standpoint? From simply what you're doing with your cash flows and your budget, all the way up to your insurance needs, your investments, all of it's correlated. Or when I was at Vanguard, I can call myself a financial advisor, but my focus was through the lens of investments, being at a mutual fund company. If someone asked me tax-related questions, even if I knew the answer, I was somewhat limited in how much I can get into that conversation from a liability standpoint.
Right.
So today, working independent, it really allows me to get into all facets of the conversation around finance. And it's kind of why I like to use, I've coined myself kind of the general practitioner of people's financial needs. Because just like you go to your doctor or physician, they're not going to be an expert in all areas, but they're the first person that you would go to, whether you have interests and concerns, interest regarding your health to stay healthy, or you need a diagnosis. They're still the first person you go to, and based off of what they diagnose and analyze about you, they're going to send you down to the right specialists to get the added help that you need. So in my world, those specialists are your accountants, your insurance agents, your attorneys, or any other niche things based off of your situation.
Okay.
So I do what's called comprehensive or holistic financial planning, where I look at your entire financial landscape, from your budget, your tax, returns, your investment accounts, your insurance policies, your estate planning documents, everything. So I can see where are the strengths and weaknesses, where are you trying to get to, and how do we come up with a game plan to get you there? What blind spots do you have? So I try to help in covering your 6, so that as you're on the way to it, is there something that you need to be directing your attention to so that you don't have a setback or be put in a worse financial situation because you didn't account for something that you didn't know you didn't know.
I like that. So going back to the auntie situation, my aunt, she's old school, right? My fictitious aunt. She's been putting money in her piggy bank for the last 60 years, stuffing pennies in there. But, she comes to you. She doesn't really have any investments, right? Does anybody need to have a certain net worth to get your services, or can anybody off the street just have a snapshot of like, here's my bank account. This is what I want to do with my money. Can you help me out?
Sure. Well, with this being my passion, I wish I could be that resource for everyone. But we all have to eat, right?
Yeah.
So, the answer to that question, I really do try to meet people where they are, and I try not to just disregard someone because of where they're at, investment-wise. And that's also, again, one of the big barriers to entry for a lot of people. They may not have the assets, and we know we've been seeing the statistics about how ready people are for retirement, how much of a net worth they have, and it's a scary number, scary statistics. But oftentimes, at the same time, they may still have the capacity to work with you. It's a matter of oftentimes people in my position aren't structured in such a way where they can be compensated to help that individual. So for a long time, one of the main ways financial service people were compensated was either by commission or like an AUM or asset under management fee. So if I couldn't solicit you a financial product and you didn't have enough money to warrant me managing it for my time and the help I'm giving, that became a deal breaker. Right. There's a lot of people that can afford it because they have the income, they have the cash flows, but it's the structuring. So it's one of the reasons why when I went independent, I focused on trying to be what's called a fee-only financial advisor, where I don't require having to manage assets to work with someone. It's a matter of essentially their cash flows. something like a subscription model or a retainer fee.
Oh,
I could also manage assets, so I can work in a number of ways with clients, but that opens the doors and breaks down some of those barriers for people getting the help that they need. So, going back to your question with your aunt, even without having the assets, I would be looking at one, what are her cash flows like, and am I able to identify enough areas that I can help her to warrant the fees that I would be charging? It's actually one of the main ways that I work as a fiduciary. Um, Working with me should be an investment for people. It should not be an expense. I should be able to, with all the areas I can help you with, I should, excuse me, I should be able to put more money in your pocket to warrant the fee you're paying.
Mm.
If I start to realize maybe you don't have the capacity to work on all the areas that I can help you to warrant that fee, then that kind of tells me I need to look at an alternative route. And I want to get you the help that you need. Maybe it's through coaching or just giving some guidance to get you down the right path to get to that point. I rarely just leave people to their own devices if they've come to me and saying, nope, I can't. I can't, you're not in a position to work with you. And that's the help that people need.
yeah.
So, so no, it's not about assets per se. It boils down to really, being able to afford the fee, and I negotiate that in a lot of ways. But the second thing, and probably even more so than the fee, is, what's their capacity? If all you can really do right now is figure out how to manage your budget, that's not enough to warrant all the things that I could probably help you with. You're not ready for going through that holistic planning process. But once you've gotten to the point where, okay, your cash flows are kind of in order, you maybe need some help with paying down debt, building your credit profile, maybe you have some investments somewhere and you're looking for, now we're getting into a lot of different areas that we can work with or look at to get you on your way.
That's awesome. So, Auntie, I hope you hear that. No matter what your situation is, Saul can help you out.
Yes.
I want to kind of go back. You spoke about being independent, and so you've been independent, if my math is right, for the last 5 years, right?
I started my business in 2022.
22, 3 years. And congratulations on being an entrepreneur, business owner. I know it's not super easy, but I grew up in North Philly, raised by a single mother, and the examples of living a good life was either in entertainment, so being like a professional athlete, or getting like a city job working in labor for like 30, 40 years, or resulting going to street pharmaceuticals, if you know what I mean. So those are like the kind of like pathways of success that I saw growing up. But I was fortunate enough to go to college, go to Morgan State, and I was able to see professionals making like 6 figures a year using their intellect. So I was exposed to, I guess you would consider them the upper middle class versus just seeing like that 1% and just seeing like the lower class or lower middle class. And that opened my mind up to like seeing another pathway of success for myself. People that look like me, that are articulate, that are intelligent, able to create a life for themselves. And that's one of the reasons why I wanted to have you on here today, because somebody's watching this right now, kind of seeing you for the first time and like, wow, like he's well-dressed, he's articulate, he's finding a lane that's not playing sports or doing those things. He found his own way. And I really just have a lot of respect for people that kind of branch out on their own. And you being an entrepreneur, you're able to kind of have that flexibility of being to work with people where they're at, like you said, right? If you're working with Vanguard still, there's a limit or there's a certain restrictions on who you can work with.
Yeah.
But now you're able to help a lot more people, provide a lot more value because you're your own boss. I know you're 3 years in, probably feels a lot more than that, right? I got a few more gray hairs than when you started. Could you talk?
The territory.
Of course, right? And you kind of said kind of COVID kind of steered you in that direction, but could you talk about some of the challenges that you faced in the last 3 years of just kind of being your own boss? What was that like?
Well, the funny thing is, I would say, for one, I mean, when you're your own boss, you have to be self-sustaining, and I don't mean just financially. I mean emotionally, mentally, spiritually. I've always been someone, personally, just my personality. I've always been someone that's kind of generally laid back, chill, maintains composure. Nothing really gets to me like that. That type of person.
Right.
When I started my business, the level of attention I had to put into maintaining my composure to stay in a mental and emotional space to function.
Right.
Because hey, if I didn't do something at any given time, any day or week, no one else was going to do it.
Yeah.
And there were times where it might have took days for me to kind of get reacclimated because maybe something was happening, life, and if you will,
Hmm.
and being able to figure out how to maintain that for yourself is so key. And I think that goes for really any business. In my situation, I was starting my practice from the ground up. So literally first client. I didn't transition a book of clients over
Wow.
or anything like that. So my first paycheck was from my first client that came in, and we went from there.
Wow.
So, and this was also coming after stop for a couple of years not working at Vanguard. So
Mhm.
this is when I was getting back into the workforce after the pandemic. Was starting to open up and everything. So
You kind of spoke about it a little bit earlier, but because it would have been easy for you to kind of go back to one of the larger financial institutions
oh
like
yeah, very easy.
J.P. Morgan or Vanguard or Fidelity. What made you say, you know what, this may be the riskier route, but I'm going to bet on myself. I'm going to go out here, jump on a limb, and I'm going to start my own business. What was like was it a moment for you, or was it kind of like a summation over time? Is this where I'm at right now?
Sure. So when I decided to kind of start getting back into the workforce, one of the main things, evaluating all of that. And to your point, yes, I could have easily went to, and still can if I wanted to,
Mm-hmm.
with my credentials, experience, and such. But one of the things that was kind of the final nail in the coffin that, okay, I'm going to go independent was actually, again, I was already thinking about it, and I knew, as you alluded to, I was restricted on who I could work with, um, not just from who I was working with, but also, um, you know, what what were the areas that were generating business, right? People were gonna flock to where the money is.
Mm-hmm.
So, um, what in order to kind of come into this space where you're working with people that may not necessarily be the most lucrative, but it's gonna need the help.
Mm-hmm.
That required some intentionality. But what really, was the final nail in the coffin of that decision was this beginning of 2021, and I remember seeing middle of 2021, and I remember seeing an article in Yahoo Finance that said 2020 was the largest entrance of Black people into the stock market in history.
Mm.
And the first thing I thought about, just from my perspective, working in the industry, I was like, I'm excited to see that,
Yeah.
and at the same time, I'm like, they're gonna need some help.
Yeah. Yeah. Right. You're right. You're right.
We know the pandemic, had a profound effect in a lot of ways,
Mm-hmm.
and one of which is a actually beautiful thing, is people realize that, hey, I can't rely on corporations and my employer to sustain what I need.
Mm-hmm.
Life is short, and we hear it all the time. Having one source of income is too close to having zero. So,
Yeah.
that resonated with a lot of people and forced them to look outside the box to be creative with how they were generating income.
Right.
And since we were all locked in, we're having to do things from home to do that. And one of the easy ways to kind of start doing that was getting into the market investing. So it's kind of a unique environment that we're in, that over the last 5 years, younger generations, people of color, a lot of people that would have normally written off investing
Mm-hmm.
and focusing on that have now been jumping into it. We see more people trading, a lot more courses
Yeah.
and all of that about trading and options and all
Yeah.
this
All
stuff.
that. All that.
And it's not to say that that's not a great thing and that people are realizing success with it. The problem goes back to what I mentioned before, is that same thing with the real estate. They realize, hey, this is an opportunity, and they focus on it and they get tunnel vision on it. What are all of the things that your decision to now start trading in options or getting into real estate or doing any of these things, what impact does that have on your financial standing as well as the goals that you're trying to achieve and your just overall financial health? I can assure you most people are not going through that evaluation, and if they are, they probably don't know necessarily how to in the most optimal way.
Yeah.
It goes back to if you're trading, if you're not thinking about, for example, if you're getting in the market and you have not thought about taxes, your investments are not going to work optimally. Period. How much have you thought about your tax situation based off of what instruments you're using to generate wealth or generate income?
That's a great point because, I speak to different networking events. I speak to investors or people that are like, really want to get into investing. And they want to flip because, there's cash flow in that. And for those of you that don't know what flipping is, essentially you're buying a home under value, you're fixing it up, and you're either selling it, fixed up, or you're renting it out. And what people don't understand is that when you sell a property and you make a profit, there's something called capital gains tax, which means that, you're basically taxed on the profit that you made on selling that home. And unless you forward that sale into a 1031 exchange, I'm not going to go into detail about that. Unless you put that in a 1031 exchange, you're going to get taxed on the money. So you may not be getting as much money as you think you are, or even if you do, at the end of the year, if you're audited, you're going to have to pay Uncle Sam that money back. And so to your point, so I think one of the biggest gems you laid out there was just that go seek a financial planner, right, or advisor to kind of help you navigate what that looks like before you even get started, before you try to take out a loan, before you even, start looking at properties. Talk to someone first to help you navigate what that path will look like so that you make the right decisions, so that you make the best informed decisions, I think is really, really key.
Absolutely.
That's awesome. I think, you're an entrepreneur, you've been in financing, what's been like what's your hard story working with a client? What's like been the worst or the toughest situation you've encountered so far?
It's a good question. I could really think about that. So it's funny. I think personality-wise, and that this is my passion. One of the things, if you ever do try to seek a financial professional, one of the main things that you want to, I don't want to say vet out, but make sure you're paying attention to is your intuition. Do they seem like someone that's really going to have your best interests at heart? And are they speaking your language? Are they breaking things down in a way that makes sense for you? And the reason I mentioned that to answer your question, I think a lot of people pick up on the fact that this is my passion. I'm not here to try to sell anyone. It sells itself. It's one of the beauties of this industry and being in this space, is that you do not have to try to take advantage of people. A lot of people do, and it's unfortunate. But if you really just do right by people and be genuine and authentic with them, this could be a very lucrative field. It actually is a very lucrative field. It's one of the, if I'm not mistaken, I think it's still one of the top 10. AI is throwing curveballs and stuff. But to your question, I wouldn't say I've had any major horror stories or anything like that. But if I had to really say what's one of my biggest challenges, it's one, the trust factor, especially when we think about lower income or people of color or those that don't have access to advice often. There's a reason why. It's a foreign language to them.
Yes.
They've never been exposed to it.
Right.
This is not something that's taught in school. It's not something that our family or parents know. And if you are coming into that information, you're usually one of the first, and I'm pretty sure you're being met with resistance. Oh, why are you doing this? Or why are you doing that? That doesn't make sense. Oh, you can't reach that goal. You're not doing what you need. All the noise and bad conditioning that we come across, in addition to that trust, is where I run into my biggest challenges and hurdle to get over. Once I've broken through kind of that trust barrier and the resistance to open up about these things, because it's also, your money is your life work. Mm-hmm. I always like to say, it doesn't really matter what your purpose is. There's no purpose that I've come across that does not involve money in some way, shape, or form.
It's the world we live in.
Right? So if you're in philanthropy, you need money. If you want to start a business, you need money. If you want to grow a family, you need money. If you want to focus on yourself, you need money. You gotta have shelter. You gotta have clothes. You gotta have food. You need money.
Yeah.
So there is no purpose that you have that won't incorporate money in some way. So it's a very personal thing. It's a very emotional thing. Um, and trying to get through that so that you can really genuinely help people in a way that they need can be challenging. But the second thing is the conditioning. Uh, there's so much noise and bad information or bad experiences that cause us to kind of get in our own way, right? So, I was actually just speaking over this weekend, and we got started getting into the topic of credit, and we know there's a lot of bad conditioning around that, right? A lot of misinformation, and I always like to equate people using credit to their experience with a stove. They may have gotten burned by a stove and now they're not using the stove anymore. Or they're fearful of it, or they're much more on guard of it, knowing without it, your quality of life is just so much lower.
Right.
So even with bad conditioning or bad experiences, that doesn't mean that it's a bad thing. It's a matter of how do we break through those comforts to explore how to make it work the way it's intended and how to be that resource for us. And I can say that about a ton of things in the financial world. Taxes, people call it a necessary evil. There's people. What's the adage? There's only two certain things: death and taxes.
Yes, that's right.
So we're literally conditioned to equate taxes with death.
Yeah,
right.
We pay until we die.
Right. We don't have the perspective that no, the tax code is actually an incentive program. Right?
Can you talk about that?
Well, let's think about when we think about taxes, and the people that don't have to pay them, that we always are condemning. The rich don't have to pay taxes, or this new tax code is changes have come out and they're evaluating who's taking the most advantage, and the wealthy and the higher income earners don't have to pay any taxes, where the taxes went up on lower income. We see those narratives all the time. The only reason that's the case is because we have not looked into what incentives the tax code provides that we can take advantage of to minimize how much we're paying to keep more of our money in our pocket.
Legally,
yes.
So you're saying instead of being upset at certain individuals that know how to navigate not paying taxes, it may be in our best interest to kind of educate ourselves to find out legal
Absolutely.
ways to not have to pay more
Absolutely.
taxes.
Absolutely.
It's funny you say that. I read two of Robert Kiyosaki's books. If you haven't already, Robert Kiyosaki, he's really, really big in financial literacy. He's the author of Rich Dad, Poor Dad. He has a few books. And the second book is called The Cash Flow Quadrant, and it kind of speaks to like different levels of being an investor, being an employee, being a business, and like the world that we live in now is really set up for you to really, if you don't own a business or if you're not a business, you're doing yourself a disservice. You actually have to pay more as an employee than you would if you own your own business.
Right.
So I highly recommend those two books, Rich Dad, Poor Dad, and The Cash Flow Quadrant. Probably going to read them a few more times too. They're just they're great books. But yeah, you're totally right on that. We can't be upset at people that know things that we don't, especially when there's so much information out there at our disposal, at a click of our finger.
Right.
I did notice a common thing that we have. We're both really big on providing access, especially people that don't really normally have access, whether that's information on real estate, information on rowing in Philly, information on financing. How do you go about providing, I guess I would say promoting yourself, or how do you go about getting yourself out there? How do you attract clients? What's that process like for you?
Well, I've been fortunate up until now where with the investments of time and money that I put into getting into the right rooms, building a network. So, just a small plug that I'm sure we'll get back to. There's a lot of things that will affect your finances that may not be money related. Your network is one of them. We always hear your net worth is your network is your net worth,
Yep.
And there's a reason for it. That has nothing to do with money, but when you invest time and effort into getting into the right rooms, that speaks volumes, and that can create and open doors and opportunities that you wouldn't find on your own. That can impact your financial, not only your finances directly, but your financial trajectory of where you're going.
Yeah.
So, one of the big things for me was building a really sound network, being very methodical and intentional about what rooms that I go into, who do I associate with, what organizations and associations do I try to be a part of. And that has afforded me the ability of not having to focus so much on marketing myself or branding myself. Now, there's some things that I'm trying to get into now that require that. Prior to me being, working for myself, uh, I was what do you call them on the social media? The lurkers, the ones that never really interact, but
always watching the stories.
I was one of those. I was one of those.
Yeah, I think most people are, honestly.
Yeah, I think most people are too. And that's a comfort thing.
Mm-hmm.
I didn't need to do so, and now if I really want to make the impact that I want to in this space, it's not just the circles that I'm in. I need to branch out more. I need to look at other ways. Can I get this information out to people? Because I do want to close this wealth gap. I do want to get this information out to people. It should be taught. It should not be a foreign thing that's gate kept.
I agree.
So I would say that's one big thing is the network. And just having a game plan, knowing what your strengths and weaknesses are. I've always been big on self-awareness. So, ironically, I'm a big introvert.
Really?
Most people nowadays, since I've been in this space, they would think complete opposite.
Wow.
I'd much rather be sitting in a corner of a room somewhere, people watching, or just relaxing and being in my own head.
Being behind the scenes.
But again, that's not going to help me realize what my passion is. So I had to break out of those comfort zones. And that's a big thing when it comes to finance too. We're in a lot of comfort zones. In fact, from a behavioral finance standpoint, one of the main things that people do when they have uncertainty with their money, one of the biggest behaviorisms that they do is they become inert. They stick their head in their sand. They avoid it because it's painful, it's not comfortable, hoping that it'll go away or work itself out. And when they say ignorance is bliss, this is one of those areas. Hey, if I'm ignorant to all the things that may be negatively coming or that I'm avoiding by not thinking about it, it keeps me in this comfort zone where not doing anything is probably putting you at more risk than taking the risk to have your money working for you either in investments or doing other things. So, the mindset is huge.
Yeah, and going back to your statement about your network is your net worth. That's really key, man. Especially being a real estate professional. A lot of the work is really just establishing relationships, but also authentic relationships.
Yes.
Right? Not people can tell when you're trying to get something from them or you're just trying to be fake about it, right?
Sure.
But finding someone that you really connect with, that your mission and your goals are aligned, right? You see things the same kind of way. It kind of breeds a lot of collaboration, creating think tanks with people with like-minded individuals, right? And a lot of times it costs you nothing, like going to a networking event, going to a meetup. So if you're watching this, just go to Meetup. It's an app, right? Type in your city, type in your interests, whatever it is. It doesn't have to be real estate. It could be math. It could be whatever. And just go around people that are like you, that have the same interests that you have, and you'd be surprised what comes out of that. So after you leave here, you're gonna hop in your car, but this car is a time machine. Okay, you're gonna go back 17 years to a younger you. What would you say to them? What advice would you give to them?
That's a good one. I would say first and foremost, don't be complacent.
Don't be complacent.
Complacence is a huge thing. It's kind of funny as you were asking that question. I was just thinking, and I think about this all the time. One thing I love about finance in this industry is that there are from a conceptual level, there are so many concepts that apply to what people do with their money in finance that you can take that concept and apply it to just about anything in life.
Could you give me an example?
So going back to the complacency thing, the reason I mentioned that is, earlier on in my career, as I was, getting experience, I felt compared to what I know I could do, I was still kind of riding the waves of, hey, life is good. I can kind of go at my own pace. Um, and that that's a mindset even in and of itself that can get in the way in a lot of ways. Whether it's through your relationship, your finances, your ambitions. It can affect a lot of things. So, and when I say complacency, I don't mean just, hey, I'm not doing anything. We're talking about expanding and growing yourself in all areas. Finding your purpose. I feel fortunate and blessed that I was able to find my purpose in finance. I just did not see it as deep as I do now, but I knew back then. Just explaining my story of how I got into it and helping people. I knew like, oh, this is so fulfilling that I can help people with something that's so necessary for them. It's their livelihood,
Same.
and I'm impacting that.
Same.
So I recognized it, but I didn't realize how deep it was for me to help me to take the risks, take the decisions, and expound upon them than that I've been doing now. That was a result of me becoming more self-aware of, what's God's purpose for me. What what really motivates me. Where, hey, this is not work. I would do this for free if I could. And in some cases, I do.
That's a good point. A lot of people, I would imagine, especially people who are watching this, are probably kind of struggling with that, right? Finding their purpose and finding out what's for me. And I think you spoke to it. I told this to somebody one time. Anything that you would do on a Sunday between like 2 and 4 p.m. for free, that's your purpose. That's where your heart is at. Anything that you would do for free, anything that you would do without someone having to pay for you, and you still get that fulfillment, that's your purpose. That's your mindset. And I love also what you said about not being complacent. For a long time, I was guilty of this too. I always thought like, all right, once I get to here, then I'll be good. Once I, accomplish this goal, then I'll be good. And then I realized like life is a continuum. Like once you get to that goal, then what? My broker / mentor Ryan, he kind of spoke about being in a space where he was like, okay, all right, I accomplished this. Now what? Right. But I think it's important to have that growth mindset, like you said, in all aspects of your life. Be a lifelong learner, always seeking to improve. Even if you did accomplish a goal, going back, all right, how can I refine this? What else can I accomplish? Because every day you wake up is a gift. Every day you wake up is a blessing. And it's an opportunity to learn from the day before to apply it to today and hopefully for tomorrow. So I think that's incredible. Um,
Can I ask a question?
absolutely.
What is the most common psychological issue that causes bad financial decisions? And I'm not saying like a clinical issue, but just bad psychology.
Yeah, another good question. I would say it's largely just going to be your it's kind of a combination of your comfortability, but also your experiences, and knowing when, because I've kind of grown up to again, being very introspective even with myself. One thing I've always learned is that stuff doesn't happen to us; it happens for us. So even the challenges that we come across, we're learning from them. I don't look at stuff that happens to me as a bad thing anymore. I look at, what was the lesson I was supposed to get out of it? How did it help me to grow? I'm always thinking about, how am I growing? How am I growing? Again, financial topics applying to life lessons. That's why I love the industry. So to your question, our experiences and what we're exposed to drive a lot of our decisions, comforts, and such. And that's the unfortunate thing for a lot of people. They haven't been exposed to the things that allow them to make more informed financial decisions. We're getting better at that. It's becoming a little bit, we're becoming more aware of it. But even on the things that we're becoming aware of, this is such a vast topic. You're only going to know what you know and how to, based off of what you're exposed to. So part of why working with a financial professional is so unique in helping you beyond just picking up a book or using AI or asking friends and family is you are now absorbing this information from someone that, again, may know how different areas are correlated to your situation, so it applies to you. Um, for example, one of the things I come across often when people start getting into the market or investing, they may know how to pick great investments, but they don't align those investments and the money they're putting into them with what they want to use that money for. They just don't know how to. So if, for example, if I know I'm trying to retire, yeah, we all want to see growth in our investments. I've yet to come across someone that says, "Hey, I don't want to see my money grow." But if I'm about to retire, am I putting my money in Bitcoin, knowing that my money, Bitcoin is one of the, highest generating assets and generating a return on investment? I think inherently we would say no, and we kind of have an idea of why, which is that it's too uncertain, it's too volatile for what I may intend to use the money for. But we can apply that to any investment, good or bad. You might think, hey, I need to be in income generating investments, stuff that's paying out cash like real estate or dividend paying stock and things like that, because I know I need income. But you may not think that that's completely aligned to my situation and what I need this money to do. I need to have a certain level of growth for my retirement because I might be in retirement 30 years. If I'm stuck in real estate, and especially if I'm, have bad conditioning around, debt and other things to tap into that real estate beyond the cash flows, well, now my cash flow is limited. If I start running into issues where that cash flow is not there, well, now my financial situation is in jeopardy because my investments and where I put my money and how I use my money is not aligned to what I intend to use the money for. So you can't necessarily read that in the book. You can read strategies in the book. You can take courses and get different ideas that might make sense. And oftentimes we're making those decisions based off of the person in question. And did they grab my attention? Did they resonate with me? Did they speak my language? But not necessarily saying, is that information that they're providing me, is it aligned with what I need it to be?
Many people aspire to buy and own their own home, but home affordability is at an all-time high, and there's some romanticism about owning a home.
Right.
What is your general position about buying and owning a home in 2025?
Yeah. No, I think it's definitely still important, and a goal I think people should want to try to pursue, but the landscape has definitely changed. I often hear that, and I think this is an old notion that has kind of expired and is not so much the case anymore, that owning your home is the way to generational wealth or to building wealth. Or once I have my home, maybe I'm now set. I have my property, and I got my if everything happens, if I got laid off, I still have a place over my head. And that just doesn't apply so much anymore. It's the same thing with a lot of the stuff like pensions no longer being here, and us having to figure out how we take care of our retirement, the risks of Social Security drying up and all that. It's bad conditioning again, that, or things that may have become outdated that we're not aware of. We're getting this information from what we hear, what we see on social, from people that don't know all of these different areas that affect your financial decisions, to be able to articulate what they're positioning. So going back to your question, yeah, the landscape around the real estate environment has changed. What really helps to drive wealth has also changed. The notion of, hey, you work a career job for 30 years and then retire in your 60s, that notion has changed. It's more common than ever that you might have a dozen jobs throughout your career, right? That might be understating it now.
Yeah, for sure.
Or having multiple sources of income. Our parents didn't have to think about that. Now we do. So all of those things matter for the financial decisions that you're making, and I think a lot of people are still focused on some of these older approaches that don't apply as much anymore, or apply to their situation. It may not even necessarily be that it doesn't apply. It may not apply to your situation because of the landscape that we're in. I think, what's the statistic now? I think the average homeowner is now
40 years
40.
old.
Yeah, right.
Think about that. 40
Right.
years old. I can't own a home until I'm 40 years old.
Right. You can hear that statistic and get discouraged by that, or you can recognize, no, that's a byproduct of the landscape and people not adapting to it. Um, you know, I talk to a lot of a lot of real estate folks that, would rather put and invest in real estate knowing that it doesn't go down in value the same way as a stock market, and they'll be focused solely on that, where the stock market has appreciated 5 times that of real estate over the past 57 years. If you're not using it, and think about how easy it is to access the stock market. You can get in the stock market with $20.
Yeah.
You have to take out loans and go into debt to get real estate, James.
And I'm saying this, even though I'm a real estate professional, I'm still a person first. And, my unbiased opinion is, you really want to look at your situation first and foremost. Like you said,
Right.
the barrier of entry to buying a stock versus buying an investment property is totally different.
Correct.
You can buy fractional shares of stock. You can buy stock for $20. And you don't have to worry about someone calling you at 3 o'clock in the morning saying that their toilet is overflowing or their roof is collapsed or their neighbors are too loud. But I think, one of the key points you mentioned was really just talking to a professional. Before you do anything, just talk to a professional, whether it's a real estate professional, a financial planner, someone that's paid to do a service in the industry that you're looking for, to really just get information. You don't even have to take their advice, but at least,
Correct.
have a conversation with them. Maybe they have explained something or talked about something that you didn't even consider. YouTube University is great. I'm on there almost every day, but it still is important to talk to someone that's a paid professional. And like you said, use your intuition, use your instincts. How do you feel about this person? What's the vibe that you get from them? Because there are people out there that do take advantage of people that don't really know too much about what they're doing with their money. It happens all the time. It still happens now, especially with professional athletes that have millions of dollars, and their focus is just becoming the best athlete they can be, and trusting someone with their money. So I think that's really key. Now getting back into this space, if someone wanted to be a financial planner, what's like the requirements? Do they have to go to college for that, or what do they have to do?
Yeah, that's a great question, and that's also somewhat changing. For a long time, having a college degree was a big part of it. You can still get into insurance sales and get licenses. I've gotten those licenses so long ago, even the requirements for them have changed, I'm sure, since I really looked at that. So I'm not entirely sure of all the different standards in a way. But my point is there's a lot of different avenues that you can go. In different companies you can go through to get into the field. But one thing I can say is that it is definitely a field that I think is overlooked way too often, especially from people of color or those that might actually have a passion in it and be perfect for it, just with their personality, their values, and such. But they just don't know that it's something that they can get into.
If only there was a platform where a professional could be on like a podcast talking about that. We gotta work on that, man.
We do.
Yeah, I'm sorry. Go ahead.
And just kind of speaking from a people of color standpoint, when we think about Black community, when it comes to this field, representation matters. Because what has allowed me to break through certain trust barriers and conditioning is being able to understand where people are and what generated those conditions in the first place. To be able to speak in terms of their interests, to say, hey, I understand where you're coming from. I give you grace with where you're at and understand why you have the challenges that you have. Here are some of the things that, you can do based off of what I know you may have access to or your experience to help navigate you down the right path. So it's hard to get that same information from someone that has no idea what your experiences were like. And not just your experiences, but what does it do to you emotionally and mentally, right? This is a very emotional space. You know, uh, if you were to ask me how much of my, how much time do where does the focus of my time go when I'm speaking with clients? I would say it's about 80% financial therapy and talking to people about their emotions around the finance as opposed to the strategies themselves. The strategies are the easy part. It's navigating to help you to understand why the strategies make sense for you versus what you may know or have experienced or what have you. So, um, but that also comes to coming into the field too. You know, part of why we have the financial issues that we do is because we oftentimes think that, hey, maybe a financial advisor is not for me because I'm not in the right place where I need to be to get that help. But you can also feel that same way, hey, this is not the right field for me because it's not in our community already to begin with.
Right.
So part of what got me into finance was not even looking at what is other people like me getting into. I chose based off of where my interests were. I would have went down psychology until my father influenced me otherwise. But again, that was my own choice that drove that as opposed to what are other people doing. Um, and that's what got me into finance. But unfortunately, the representation is extremely low, and that also is a part of why the accessibility of this information is not there.
Yeah, I mean, hopefully, with this platform here, with this conversation here, hopefully, we can kind of dispel that, and hopefully, this sparks someone watching this, whether it be today, tomorrow, whether it be years from now, somebody is tuning in and watching this. Now, anybody interested in being a financial planner, would you recommend that they start with like one of those big institutions first and then branch out on their own, or just try to get licensed up, educated, and then branch out on their own?
I would absolutely say to go with the bigger institutions for a variety of reasons. One, it does require getting licensing if you're really going to be in the space to give advice. Um, even if it's just insurance, there's life insurance licenses you have to get. Even if you're on the tax side, there's licenses to get. Um, when you want to start giving advice around investing, you've got to get your Series 7 or 6 and 63 and 65. Like you need licenses for that. So those things cost, and at the same time, they oftentimes require a level of experience. And you have to be sponsored by someone too. So you're most likely not just going to start your business one day and be able to get into all of the areas of finance in a legit way. It oftentimes requires having that experience, and usually that's coming from your larger institutions. In addition, oftentimes those institutions are going to sponsor you and cover some of those costs for you. It's part of your training. It's required for you to do your job. So rely on those companies to invest in you, invest in your building your experience and knowledge in this area, and taking a lot of the legwork that you might have of having to figure out how to manage your business or do the compliance and the business planning and your finances, your financial statements and all of that. Let the firm focus on that. You focus on building your experience.
So kind of get there, use their resources and their information to kind of build yourself up, and then once you feel like you're ready, then kind of branch out. It's kind of the pathway. It's kind of what you
in
did,
addition
right?
to you're working with, you're gonna learn strategies and learn what, you're gonna be reinventing the wheel. Works doing this on your own from the start.
Excellent.
Let's avoid the trying to reinvent your own wheel. See what works, what doesn't work, what area, and this is a vast area. Like I said, there's a lot of people that call themselves financial advisors, but they may be focused on insurance, they may be focused on investments, they may be focused on credit repair, they may be focused on banking, investment banking, taxes, estate planning, college planning. There's so many different areas that have specialties, and you're still in the financial services space. I would kind of consider you still in the financial services space, even though.
Yeah. I try not to give too much advice. I leave that for like the loan officers, but anything that I do know, I do share. But I always want to direct people. If you have questions and you're talking to someone, they're giving you advice, one thing to do is make sure that they're licensed, because that means that they're legally certified by the state that they're in, right?
Sure.
It means that they paid, they paid for that. They invested in themselves to be educated. They're not just somebody that, made a lot of money and just having like their own quote unquote mentorship program. They're actually licensed in the field that they're considered an expert in what they're doing. So, that's really something to think about. And in the spirit of access, if people wanted to kind of continue the conversation or just have more questions for you, how would they be able to get in contact with you?
Yeah, so there's a number of ways. You can definitely find me on social media. You can find me through Instagram. So you referred to me, introducing me through Saul and Finances. That's my handle. So it's my last name Saul _on _finances. The firm that I work with is Collective Wealth Partners. It is a black-owned, independent, and majority woman-operated financial advisory firm. Um, and our mission is really to help those that generally don't have access to advice to do so. So from a business standpoint, we're structured that way, and the beauty, again, behind us being independent is it allows us to really meet people where they are in all areas of finance. Um, and so I was certainly ready to provide my contact information as well.
Yeah, man, that's awesome. And also me, Realtor G _, at Instagram, or just type in G real estate on Google. You should be able to find me. And that's pretty much all the questions I had. Again, thank you so much for coming out. Just really willing to provide value for everyone. I'm sure there's somebody out there that you've helped already.
Sure.
Especially just you representing who you are, your background, and then seeing you in this light here. I'm motivated. I'm inspired. And if you could leave the audience with one word of the day that you just want, that just comes to mind, one word, what would that word be? Word for the day.
Freedom. That's what this is about.
Freedom.
All of this is to get you free, liberated from having to be stuck at your job. If you want to transition, free from the stresses of your finances. It doesn't have to be a stressful thing. When you have a game plan and you know where you're going, that's usually half the battle. So I would say freedom.
Freedom. I love
Financial
that.
freedom.
Financial freedom. I love that. The power of the mind is not a joke. It's all about mindset. So, yeah, that's pretty much all I have. Thank you so much for coming out, man.
Very
This
much.
is awesome. Thank you for having
Thanks
me.
for having me.
Thanks for coming out here, braving the elements. I think we're good, man.